And good morning, everyone. I'm Dan Rogers. I'm the Executive Director for the Kelowna Chamber of Commerce. I want to thank you for joining us this morning for our second in what we hope will be a number of Business Smart's online webinar series. We're pleased to have some guests from KPMG in Kelowna joining us. I'm going to formally introduce them. I have a few slides to go through before we get into that presentation. And we have lots of folks joining us this morning, and some of them are just trickling in, so we'll give them just a couple of moments before more formally getting into the presentation. I want to thank, again, all of those that have joined us, the members, as well as those that are not members of the Kelowna Chamber of Commerce. We're pleased to be offering all our programs and services during this uncertain times universally to anyone that has an interest, not just those members. We certainly appreciate the investment that our members are making so that we can continue to do the work that we do in being the voice of business in Ottawa and Victoria through our partners at the provincial and national chambers, but certainly also at City Hall as we work closely with local government. I want to thank you all for joining us. We also want to thank those that contribute so much on a day-to-day and on an annual basis, including our President's Circle members. They are our pillar members, as well as the close to 1,000 other members that have joined the Kelowna Chamber of Commerce. And we're pleased to have one of those strong members with us this morning, KPMG, and in fact, a former chamber president, and David Bond, and I'll introduce David in just a moment more formally. This Insights will be focused on the tax side, and we're pleased to have Nicole Watson back with us. Some of you may recall Nicole. She's helped us out when we've analyzed previous government budgets in the past during some of our budget briefings. And we may get to that if we have a federal budget. We assume somewhere along they will, but that may be some of the discussion, what you're hearing, Nicole, through your networks. The time frame we have set up this morning is an hour, so we will turn things over shortly to Nicole, who will walk us through an update on some of the programs and some of the tax issues that she's aware of that KPMG and their client base have been having some discussions on. And then we'll open it up to questions and answers. For those of you that are new to this format, Zoom, I'm assuming everyone's rapidly coming up to speed on using these types of programs. There is a question and answer icon at the bottom of your menu. At any time, if you want to start putting in some questions there, after we get through the presentation from Nicole, we will then turn things over to a question and answer session, but we do promise to wrap up at around 11. While I have your attention, I do want to note a couple of upcoming sessions that you may have some interest. If you are into webinars and roundtable discussions virtually, seems all our calendars are filling up quickly with these types of sessions. There is a session this afternoon hosted by Tourism Kelowna. You can check out information through Tourism Kelowna. I think they are still taking late registrations for that. It's a broader look from 1 till 2:30 this afternoon on the tourism sector particularly. It's hosted by Tourism Kelowna and CEO Lee San, who's put that together. That's at 1 o'clock this afternoon. For us, our next one will be our Okanagan School of Business Online Speaker Series next Wednesday. On April 22nd, we're pleased to have His Worship Mayor Colin Basran joining us. That is presented next week by Business Finders. We will begin the program right at 12 o'clock. We don't have lunch as we normally would do, so we'll expedite the programming and it'll be in a condensed format. The mayor will speak for and present for about 15-20 minutes, and then we'll open it up to some potential questions and answers that folks have. So we're looking forward to that. That's next Wednesday at noon. So bring your own bag lunch to your computer, and we'll join you for our Okanagan School of Business Online. And our next Business Smarts series, we're pleased to work with a lot of local experts, including those that have joined us this morning from KPMG. Next Thursday at 9:30, we'll engage with Shawnee Love from Love HR, managing and engaging staff while working remotely. when this is all new, and we might share some of those experiences that David and Nicole and KPMG has dealt with as a corporate entity. So this is an interesting time. Did want to also note, just prior to March, we were planning for our annual general meeting. We had to postpone that. We have now rescheduled it for our members. You'll be getting a specific communication to you coming out shortly in the next day or so. But just to flag, it'll be 9 o'clock, the AGM on April 28th via Zoom. And we have a number of motions that we are required to pass that will be occurring. As I mentioned last week, we are still running a number of programs. We're just delivering them differently. One of those is in partnership with World Trade Center Vancouver, the Trade Accelerator Program. There are bursaries available to Chamber members valued at $4,000. So this might be a great opportunity if you do exports to increase your knowledge and capacity and how to accelerate once things start to turn around here on the export side. If you want to get a little bit more information on this, just contact the Chamber office and we'll walk you through it. It's delivered online and eventually through World Trade Center Vancouver. We can give you more information. If you're not a member, no problem. Just join up in our lowest category and you'll be able to qualify for that bursary, as mentioned, that's worth over $4,000. So with that said, I think what we'll do is get into our program and turn things over to our speakers this morning. I do want to acknowledge that we have David Bond and Nicole Watson from KPMG in Kelowna that have joined us this morning. And just to give you a bit of background, Dave is the office managing partner of Kelowna KPMG. He's an audit and enterprise partner with more than 23 years of experience providing assurance and advisory services to both private sector and public sector organizations. Good morning, David. Thanks for joining us.
Thank you, Dan. We'll get into the presentation in a minute, but I'm glad to be back participating in the chamber webinar. What we're going to find is it's very dynamic times that we're dealing with. As Nicole goes through her presentation, she was just updating her presentation tomorrow because as things are changing daily in this in the world that we're working in right now. So it's very interesting times and very challenging times as governments put forward legislation and policy in place as they're trying to react to the COVID-19 situation. The actual devil gets into the details on how you put it in, and that's sort of what Nicole's going to cover off today.
So it is interesting, and I'm sure there will be a lot of research done post response to COVID-19 of just how our systems operate. We like our institutions, but are they robust enough for decision making in a crisis situation that we're facing? So it's fascinating. We are feeding as much information up to the provincial and federal governments as we can, but I'm assuming it's the same thing with your client base, so we're pleased that you've joined us.
Yeah, and I think what you're finding with the governments is that they're introducing legislation, but at the same time they're getting feedback from the Canadian Chamber of Commerce, from the Chamber Network. They're also getting feedback from KPMG and the other accounting firms across Canada as to how these things work. How, when you want to put through a temporary wage subsidy, what are the impacts and what are the things to think about? So there is lots of dialogue going on, which is good, but it's still, and the reason why it's changing rapidly.
Yeah, I think we're going to try and do a session later up with our elected officials. Hopefully in the next week or so, we'll get them in. Traditionally, government doesn't move fast or is high risk, and as business organizations, we like the fact that they're not high risk because there's still accountability of taxpayers' dollars, but there is a necessity to be open enough to that change. So we'll get into that in a future one because I want to focus and get Nicole in here. We're pleased to have Nicole Watson, as mentioned. She's no stranger to the Chamber. We've had her in the past helping digest previous budgets that have been tabled by government. And as mentioned, we hope to do that when the federal government eventually gets around to tabling a budget. Nicole is a senior manager with KPMG's Kelowna tax practice. She has over 15 years of experience in individual and corporate income tax experience. Nicole, I want to thank you for joining us and taking the time out of your schedule to prepare this presentation and join us this morning. We've got a pretty good crowd. So at this stage, I'm going to turn things over to you, Nicole, to walk through the presentation and provide updates. And we've got a number of folks that have already used the Q&A button. So if you're watching and listening to Nicole's presentation, feel free to just get your questions in early and we'll work through those following Nicole's presentation. Nicole, over to you.
All right, thank you, Dan. I'm just getting the presentation up and running, and first time I think in a few weeks getting out of the home office, so I'm hopefully a little more confident that technology won't crash on me today. That's been the never-ending battle in our household with the kids here and everyone on conference calls at the same time, so I expect this should go smoothly. So I thought today, I know that there was a presentation done last week which outlined a number of the federal and provincial measures that had been implemented or proposed up to last week. As Dave mentioned, it's very dynamic. There's changes on a daily basis. I have CBC News on at 8:15 every morning, trying to be on top of all these changes. And one of the big changes that's been proposed for a number of weeks was this large 75% wage subsidy, which was to be a very significant enhancement provided to a number of businesses in Canada. And so what I thought today was that I was going to walk through a lot of the details of the qualifications. We have final legislation that came out over the weekend. And we know that a lot of people have seen the highlights, but it's really in the details to go through those to see whether a business will qualify for this subsidy. I'm also going to talk at the end a little bit about what's been discussed by the Prime Minister both this morning as well as yesterday as additional enhancements that will be introduced in the next, I'd say, week or few days. And then, as you mentioned, we'll have question and answers. I'm also happy to answer questions outside of what I'm talking today, such as other measures that were introduced and discussed last week. We know that applications have been made available for both the emergency loan that was guaranteed by the government as well as the emergency response benefit. Trying to switch slides here. Oh. All right, so as I mentioned, we now have final legislation. We received both draft, final, and royal assent on Saturday, April the 11th. And we've been going through these rules in detail since that time. Some of the main highlights, most people are aware, it is a 12-week program, starting with wages paid retroactive to after March 15th. And the program is intended to provide a subsidy to qualifying businesses for up to 75% of wages being paid that might be based on a pre-crisis wage or current wage to a maximum benefit of $847 per week. So I am going to go through the various rules and qualifications, starting with who is an eligible employer. So which employers paying wages can access this benefit. So to start off with, there has to be an individual. It applies to corporations, but noted that corporations that are public institutions are not included and they're not eligible for this subsidy. Registered charities, not-for-profit organizations, they are eligible for the wage subsidy, assuming they meet other criteria. Also included are labor organizations as well as chambers of commerce. Partnerships would be an eligible employer as well, but each member of the partnership must be either an individual corporation or one of the previous qualifying employers. So I'll go through on the next slide here who would not be eligible. So as I mentioned, public institutions are not an eligible employer. So most municipalities, they are often incorporated. So a municipality would generally not be able to access this 75% wage subsidy. That wouldn't include, though, many First Nations, because many First Nations are actually unincorporated. And when you go through a number of the provisions in the Income Tax Act, a First Nation often falls into the category as an individual. Another entity that wouldn't qualify would be a municipal corporation, or subsidiaries. So that could be a corporation wholly owned by either the municipality or a First Nation, and if their income is exempt. So those type of entities paying wages will not be able to access the wage subsidy. We also see that there are a number of partnerships they might be entered into for various planning and economic development activity, either from a municipality or in the First Nation context. And if one of those partners happens to be a municipal corp that's exempt from tax, those partnerships do not fall within the guideline or within the legislation as an eligible employer. So we have seen some lobbying, at least on the First Nation side, where they're seeing a lot of areas where it's being missed and they're not eligible to access this subsidy. Okay, so following after we figure out who's the eligible employer, we start looking then at the next criteria and meeting certain revenue tests. So businesses paying wages to access this subsidy need to show a drop in revenue. And these drops in revenues range from 15% in March, but in April and May, they need to show a 30% drop in revenue. Prior to last week, it was discussed that March was a 30%. So that is one thing that has changed in the last week, is that March only needs to show a 15% drop in revenue. And also in terms of the reference period, there was some changes as well. So initially, there was discussion that the reference period, when you're figuring out if your company has had a 15% drop in revenue in March 2020, you were required to look at March 2019. However, under the rules now, that company, if March 2019 doesn't show a drop in revenue, for example, if it's been a high growth company, or if they were recently started business in the last year, that company can look to an average of the revenue in January and February of 2020 when determining if March 2020 revenue has dropped 15%. The caveat with that is that if you use the January and March 2020 revenue, then the January and February 2020 revenue for a March reference period, those two same months need to be utilized in terms of determining if there's been a drop for April and May. So you can't compare March 2020 to January and February 2020, but then in April compare April 2020 to April 2019. The other one that came out, new thing that came out in the legislation, was that if this revenue test has been met for one period, that company now qualifies for the next period. So if the business is doing performing its analysis of revenue, finds that there's a 15% drop in March 2020, it will then automatically qualify for the wage subsidy for the next pay period in April. We understand there still have to be an online application, but it seems that they don't need to recalculate their revenue in April and make that comparison. They would again have to do that for May, though. When calculating revenue, there are a number of rules within the legislation. The first rule indicates that the business would calculate revenue based on normal accounting practices. So that's often accrual-based accounting. However, the government has indicated that it is aware there's a number of industries where accrual-based accounting doesn't necessarily reflect where the company is cash-wise and its ability to operate today. So it is allowing companies to file an election to calculate revenue on a cash basis. again, once that election is made, it applies to all months, all relevant periods when calculating the revenue. So you can't pick and choose March as cash and April as normal accounting practices. A number of businesses, they are part of a larger group of companies, and they might have wages being paid from various companies within their overall corporate structure. And the concern is where is their revenue coming from? Will they be able to show revenue drops within each company? So what came out in the legislation was that these companies can calculate revenue on a consolidated basis. So they calculate the overall revenue of the whole corporate group, and they do their revenue comparisons as a consolidated revenue basis. If they meet that test, then each company within that corporate group would be considered an eligible entity and access that wage subsidy. So they wouldn't have to calculate that revenue on an entity by entity basis if they can meet the revenue drop on a consolidated basis. If the consolidated basis doesn't work, then they can also choose to calculate the revenue decrease percentages on an entity by entity basis. Where a business might have an interest in a joint venture and more than 90% of its revenue comes from that joint venture, when calculating the revenue, it's a look through to the revenue of the joint venture. Charities and MPOs are, as I mentioned, they're also eligible employers, and for them, they can actually elect to choose to ignore government funding in their calculation of revenue. What the revenue doesn't necessarily include, so what you'd have to remove or back out from calculating revenue would be extraordinary items. And for the most part, you would take out revenue that is from non-arm's length sources. So non-arm's length revenue from another company in the structure or partnerships. The exception for that, however, is if a company within the corporate structure, say your holding company or management company, it's the entity paying all the wages, but all of its revenue is coming from various other entities within the corporate structure. Instead, and say they don't want to calculate revenue on a consolidated basis, in that case, if more than 90% of the entity's revenue is coming from non-arm's length sources, there's another special formula within these provisions that essentially allow them to look at the revenue of the underlying entities to determine, whether there has been an appropriate amount of percentage revenue decrease. So then we've talked about the eligible employers, we've talked about revenue calculation. Now, who are the eligible employees? So for one, the employee must be employed in Canada, so the wage subsidy does not cover those employees that might be employed outside of Canada. The other one is that employee cannot be without remuneration or wages for 14 or more consecutive days in a qualifying period. So that first qualifying period, which I'll go through those later, is March 15th to April 12th. And we do know that there's been a number of employees who have been laid off and accessing what they call the CERB, the emergency benefit. And so for those, they seem to, these employees might already have been off for 14 days. So the federal government has come out and stated that employers can have the ability to rehire employees retroactive to March 15th, and that employee could pay back their CERB benefit and therefore qualify, that wage paid can qualify for the wage subsidy. What is included in remuneration is wages, but what is not included would be something that would be remuneration included on a T4 but relates to a stock option benefit. So those would be excluded from what would be subsidized as a wage. Excluded is also retiring allowances or, you know, they've got a few paragraphs in the legislation about any items that might end up being paid back to the employer. So where the government's getting at there is, we're not going to give you a subsidy if you've sort of come up with some sort of plan where you'll provide wages to employees that aren't working, and later on, once things settled, you pay back the employer. So now I'm going to go through a couple of examples of the calculation. I've split it into two categories, one for arm's length employees. The calculation is much more flexible, and definitely allows us to get, you know, maximum subsidy where possible. And then I'll show a few examples of non-arm's length employee calculations. So with an arm's length employee, the calculation is really the maximum of 75% of either the pre-crisis weekly wage paid to the employee or the current period wage paid. And the maximum is $847 per week. So that generally works out to about a salary of $3,300. And if you were to gross that up to the, say, if you're trying to get what is that 75% representative of, it's about $4,500 a month. And this number is in reference to the CPP maximum. The other part of the subsidy calculation that has also been introduced just last week is that if a business has employees that are not working, but they are paying them, if that employee is not working, then the company can get a subsidy for the employer portion of the CPP and EI paid on those wages. And with that part of the calculation, there's actually no maximum wage, so it's not in reference to this maximum $847 per week. The subsidy is further then reduced by the 10% wage subsidy that a business might have already benefited from. So that 10% wage subsidy was likely discussed in the presentation last week. We know a number of businesses have already accessed that benefit by making a reduced source deductions in the first couple weeks here in April. And then if there are any employees of the business that are on a work share program, they can be receiving EI as well as wages. And so that amount of EI that those employees are receiving is backed out of this calculation. And then before I get into the actual example, one good definition to note is what is referred to as baseline remuneration. In the past publications, this was also called the pre-crisis remuneration. So those are the same term, but the actual legislation calls this baseline remuneration. And so what that is, it is the average wage paid or remuneration paid over the period of January 1st, 2020 to March 15th, 2020. And that in that period, you would back out any periods of 7 or more days where the employee wasn't being paid. So I think what's important to note there is that it doesn't make reference to any wages that might have been paid in 2009 and a weekly amount for there. And that becomes a little bit more important when we get into non-arm's length employees. So as a first example here, we've got an employee who earned $500 a week prior to March 15th, 2020. So that becomes the employee's baseline revenue. And because of cash flow constraints, the business is now paying that employee $375 a week. That is the 75% of it, but they've chosen to just now pay the employee this $375 a week. In this case, the subsidy ends up being $375 because we base that calculation on the pre-crisis baseline $500 weekly wage. So at the end of the day, really what's happening here is the government subsidy is fully covering the cost of the wage paid to the employee. The government has indicated, though, that if businesses can continue to pay employees the other 25%, so pay them the $500 a week, they recommend doing so where possible. Another example would be a higher income earner of an employee who was making $1,500 a week prior to March 15th and is still making $1,500 a week. In this case, they're limited, the employer, when paying this wage, is limited to a maximum subsidy of the $847. So now I'll get into a couple scenarios on non-arm's length employees. And this is where I find we are answering a lot of questions and concerns for a number of our clients. So the calculation is a little bit different. It's a least of, not a greater of formula. So the amount amount of subsidy available on a wage paid to a non-arm's length employee, so that's like a shareholder, maybe a controlling shareholder, and the amount is the least of the actual wage paid, 75% of that baseline pre-crisis revenue, and $847. It's further reduced by the other subsidies noted and discussed previously. So the first example I have shows a shareholder who is non-arm's length and who was earning $1,200 a week prior to March 15th and is now earning $1,000 a week after March 15th. In this case, when you go through the least of formulas, you look at the baseline, 75, you'd be limited to the $847 maximum per week. What's interesting to note though, had this been a non-arm's length employee, that subsidy would have been $900 a month because we would have taken 75% of the $1,200 baseline revenue. Just to note here on the slide, the heading should actually read non-arm's length employees as an example, not arm's length. If anyone's making notes. As a second example here, again, we've seen a number of these examples in our own clients. We have a shareholder who takes their annual wage one time a year. And they take it, say, in this example in December, they take an annual wage of $80,000. And we find a lot of clients do this for simplicity. They make the one-time payment to CRA of the source payroll withholdings. And because they hear about this 75% wage subsidy, they think, well, let's have my company start paying me on a weekly basis so I can access this subsidy. And the shareholder starts receiving $1,500 a week after March 15th. In this case, the subsidy to the shareholder would be $0. And that is because there is no wage paid to the non-arm's length shareholder between January 1st, 2020 and March 15th, 2020. So regardless of the fact that they are taking sort of an annual level wage, they would not be able to access the subsidy based on the current legislation that's been implemented. Another example of where we're seeing the wage subsidy not be available would be a shareholder who normally takes dividends. They don't take an annual wage. But again, they're considering taking a wage of $1,000 a week, want to see if this wage subsidy is available. Again, because there was no wage taken in early 2020 up to March 15th, the subsidy would be $0 regardless if they started putting themselves on a wage plan versus a dividend. Just as mentioned previously, when calculating the wages paid, there are qualifying periods. So when the businesses end up applying online, they would look at the wage paid in 3 different qualifying periods, which are noted on the slide. What has come up as sort of a bit of a gray area questions is, well, if the employees are paid on the 15th of every month, does that wage on April 15th fall into the March 15th to April 11th, or is it based on when the cash is paid to them? So there's different trains of thoughts. I know I've heard some discussions with the government that maybe that calculation is a proration of the wage to, whether it's by day or a by week, but that is something to wait and see. And like as most legislation that's introduced, there is anti-avoidance rules. So if there are companies that are artificially attempting to show a drop in revenue that doesn't really exist, there is a pretty significant penalty of both 25% of the wage subsidy received, as well as a requirement to repay that wage subsidy. This was, nothing really has changed in the overall process. Our understanding right now is that to apply for this wage subsidy, it's through my business account through CRA Online. And so what we're doing with clients is we're recommending them to get access to this as soon as possible, because a lot of clients will use their accountants to pull information for them through a separate represented client. And so it's really important that they get their own business set up personally, to set up through the My Business account. And then part two of that would also be to make sure that there is direct deposit set up, because once making that online application, if there's direct deposit, those businesses will be able to receive that cash a lot sooner than waiting for a check. Our understanding is that this online portal is still a ways away. I think the Prime Minister said earlier this week, 2 to 3 weeks, but we do know that CRA is very constrained in terms of its resources, and we've also heard 3 to 4 weeks is maybe a more likely, but again, a wait and see there, because I do know that there's a lot of pressure on the government right now to be releasing this cash a lot sooner than starting an online application 3 to 4 weeks out. And then as noted, each qualifying pay period, there would be, the employer would, or the business would need to be applying. I think I'll get into now just a couple slides here on what was discussed today and yesterday by the Prime Minister in its daily speeches. So, we heard a number of situations last week where people that thought that they should be able to access this emergency response benefit, that's that $500 a week, $2,000 a month, were being missed. So there was some enhancements that were introduced yesterday. Again, no legislation on these yet, but what they've indicated is that if somebody is earning $1,000 or less per month, they can still access this response benefit. So prior to this week, you had to be earning nothing to be able to access the benefit. There's some proposals that seasonal employees, so those who were expecting a summer or spring employment but it's no longer available, the CERB benefit will be available to them, as well as individuals who might have been on EI before this COVID started, and now their EI is ending, but there's no work for them. So again, they are now able to access the CERB. Government also mentioned that they are looking at ways to top up the earnings of essential workers that are currently making less than $2,500 a month. That was further discussed a little bit today by the Prime Minister, and that they're working a little bit with the provinces on figuring out what the details will look like. And they also mentioned that this was yesterday, that there was going to still be more measures to come for post-secondary students and businesses. And then one other thing to point out is last week was the first week of applications for the CERB, but the online application is now already open for the next period, covering the period of April 12th to May 9th. And then today, my recent updates to the slide this morning, the government mentioned that it was enhancing the Canadian emergency business account. So that's that $40,000 loan guaranteed by the government that is accessed by the business through their financial institution. And so what the government has proposed is they're planning to reduce the minimum amount of the wage from 50,000 to 20,000 and stretch that maximum wage paid to 1.5 million. So now businesses that have wages of 20K to 1.5 million should be able to access this $40,000 loan. And then finally, the government mentioned today that we'll be expecting to see a new Canada Emergency Commercial Rent Assistance Package coming out. And that's meant to cover rent for small businesses for April, May, and June of 2020. The government, how that gets rolled out starts with discussions with the provinces by our federal government, and then details again to follow. So now I think I hand it back to you, Dan, to sort of coordinate a lot of those questions, and then Dave and I will be here to answer those.
Thanks, Nicole, very much. And then you can just stop sharing your screen. We'll bring it back and bring in Dave. Yeah, there's a lot of early mornings to find out what changes are occurring. So thanks, Nicole, particularly for adding a couple slides to bring us up to date on the most recent discussions. We have a number of questions that have come through the Q&A. For those that have joined us, if you haven't used Zoom, you can go to the bottom menu bar. It's listed as Q&A. There's also a chat, and we've had a couple come through the chat that I'll address as well. We'll pass those along, and we'll cover as much as we can in the next 18 minutes or so. Just on the clarity from this morning's announcement, if you could, Nicole, or to Dave, and we'll tag team, and you can jump in, either one of you, as we go through this. With respect to the changes, it was good to see the Prime Minister make the announcement on the change on the emergency business account. Particularly, we had heard from a number of our members, I suspect you've heard from clients, with respect to those that got a salary through a dividend that wouldn't reach that threshold of 50. So we've seen the government, as an example, respond. Is that the type of circumstance you were hearing from your clients as well, that when they looked at that 50,000 as being the bottom threshold to qualify for that loan, that was part of the issue, that around the dividends rather than actually wages? Were you hearing from clients similar to that, and is this in response to some of what we're hearing in the marketplace?
Yeah, I think it's that we were definitely hearing a lot of issues about clients that were only paying themselves by way of a dividend. And still that wage threshold, if you're only taking dividends, not only do you still not access this $40,000 loan, but as mentioned, you're not
Oh, did you hear me there?
We lost you just for a moment.
Yeah, no, my headset battery ran out, so of course a technical issue. But yeah, I think it doesn't. I think that was in response to some of the examples, but it's still, if you're only on dividends, these companies likely don't even have a $20,000 wage. So again, they're still missing the benefit of both the loan as well as the 75% wage subsidy.
All right. We have a number of questions. We're going to try to get to those as quickly, so I'll summarize them as best I can. We had one that came in early. We had received the $40,000 no interest loan yesterday. Does it get entered into our books as a loan? And of course, 10% of that is forgivable because the 30% has to be paid back. Does the leftover 10,000 get recorded as income and then a taxable impact with respect to that? Good question.
Yeah, and I think I answered that, Dan. Part of what happens is that loans, there's different types of government assistance, and we're going through this process. Some of which is they announce as a deferral, so they announce that they defer your payments for GST, and the government of BC announced they defer employer health tax payments. Those deferrals are, they're cash, so it's going to have to be paid at some point. So that goes out, and the two other things that they've done, this wage subsidy, the temporary wage subsidy, is effectively government assistance. And to the extent you've got a loan forgiveness on the 40,000, that's also government assistance. So that how that gets reflected is it gets reflected as income. So the temporary loan, the $40,000, is recorded as a loan, and then when you pay it back and you're otherwise qualified for the forgiveness, and that forgiveness will be income for accounting purposes and tax purposes. And I'll turn it over to Nicole if she has anything else to add.
Yeah, I mean, from a tax perspective, often there's special rules on debt forgiveness where instead of it coming directly in income, it can be first applied against other tax pools if there's losses carried forward or reducing the cost of assets. So there is, there's maybe a way to defer tax on that $10,000 forgiven amount.
Okay. Next question. Eligible remuneration include vacation pay, bonuses, anything that would be in box 14 except for certain exceptions like severance. So some of the finer details, Nicole?
That seems to be the case. More standard type wages, or I've specifically excluded there what, the stock options that wouldn't be included in retiring allowance, but it should include, say, vacation and bonuses.
Do you get a sense, and quickly, because we have a lot of questions, when you looked at the 10% that people can apply for in the wage subsidy program, controlling the distribution of tax dollars on an application makes sense until you get a really complicated application process that people throw their hands up. Do you get any sense once this comes that we're all going to be phoning our accountants and our bankers to help us through this process?
I think we're talking more as I mentioned, the devil gets in the details, and it's also what we're finding is this reporting at the back end, and what, as Nicole mentioned, that there is penalties for not completing the information correctly. So the one thing that we anticipate is that companies, and it gets more complicated, is actually calculating that reduction in revenue and actually reporting on it. So they're going to want the controller or the CFO for a company to certify that the drop in revenue is correct. And so we foresee that, and that might be something you're reaching out to your client, your accountant, to review, maybe in certain cases actually do some audit procedures on it. So we do anticipate one of the things that will come out of this is, because there's some penalties around it, and then there is some reporting that businesses have to do, that if it is complicated, you might have to be engaging your accountant to help with it.
Next question. For baseline salary, is there any indication of exceptions for business that may have a low seasonal cycle during that period that looks like the qualifying the January 1st to March 15, for example, RV sales or boat sales, where that is expected?
Yeah, that's another example of where I've seen a gap, because often the wages are paid in the summer, and so there is no baseline. And so for the arm's length employees, if you're able to hire them back and have some sort of business, you can get the subsidy on the wages paid to them. But that owner employee, that subsidy is so far not available.
So I just want to illustrate, there's a good example of you're hearing potential from clients that you feed that up through your network. We hear it, and we would encourage those that are on, even if you're not a member of the chamber, contact us, let us know. We'll feed it up through our national and provincial network. And then the government, as we see, is responding to that input. So it's important that we flag these so that we can come back around and ensure the government takes some action on these, because there are going to be issues like this that arise, and we want to ensure that government is aware of this. I have 12 employees on my payroll, which include myself, my wife, who is our bookkeeper, and 2 of my adult children. One is the marketing manager, one a project manager. Do they all qualify for the CHOOSE, I guess is the acronym that we're using on this one, the wage subsidy?
Yeah, I think assuming they've met all the revenue tests, then you have to sort of put the set of employees into buckets, the arm's length one and the non-arm's length. And those terms are actually defined in the Act. So again, non-arm's length would be the controlling shareholders, so let's just say mom and dad, and those people that are related to them. So the children would fall into that non-arm's length category. And so again, you're back into looking at the different calculations, a little bit more restrictive calculations for non-arm's length employees.
Okay, next question was, can application be made via represent a client?
I was just asked that question earlier today, and that's something on my list to look into, because my understanding through my business, it has to be an owner, and some of the owners might be wanting someone in HR to be helping. And so that's something that we're looking into, because so far we haven't heard it's available through represent a client.
So a couple things for those that have joined us. We will make this slide deck available through our website, and we'll get it out to those that are registered directly by email. And if there's some follow-up, we'll also respond to, if we don't get to all these questions, we'll try to get back to them, particularly with those that have expressed them. And there's a great example. If there's more information with respect to that, we will share that as soon as we get it. So thanks very much for that question, I think from Kathleen. So, is there any indication that the 75% wage subsidy can be applied for through the CRA representative client service? A similar question, so we'll go. For the 40K loan, we did our application. We heard that TD is denying some applications. So are the role of financial institutions in the delivery of that program, that's where it's coming through, the financial institutions? Are they also making the call? Have they charged with who is responsible, given that the government has guaranteed those loans? I'm assuming, if you know that answer or not, we could check with the financial institutions, but there's a check and balance. Are they charged with that as well as divvying the money out?
Yeah, I don't know for sure. I think the idea going through the financial institutions is there might be other reasons why I do it. I don't know. I guess we don't know the answer to that, other than my understanding is the reason they went to the financial institutions is just to allow the flow of cash to go a little bit easier than straight from the government.
Yeah. We've heard a few comments from clients. One was, say, attesting that they needed to cover certain expenses, whereas the language on the Department of Finance is a little bit broader in terms of that loan should be available to cover even things such as payroll. And I heard one client be told it wasn't to cover payroll. I had another client that was denied, but they weren't really told why they were denied, and they thought it was maybe just a discrepancy on the address on some of the documents they had. But I think there was just some unanswered questions on why they're being denied.
So it's interesting because you could theoretically have companies and businesses and organizations that deal with multiple financial institutions. I think the government has tried to get ahead of that by taking the shot across the bow, saying if you go beyond what you should be doing, we're going to eventually catch you. If there's anything we know, that the tax man usually does catch up with you somewhere along the line. But you could check with your financial institutions and potentially work through this with them. Next question, how the wage subsidy benefits are reduced by work sharing program. Is it the amount of benefits received by employee or the gross amount for the missed hours? So a blending of different programs that are out there. If you can give a sense of that.
I believe it's the amount of the subsidy received by the employee from EI. Let's pull up, I have legislation here on that.
There could be a number of scenarios. As Nicole, you look at that, I was struck by going back to use the wage subsidy, but they had already qualified for the CERB. So the individual is then responsible for repaying the CERB, or because there could be an offside there too as well.
Yeah, that's another actually a planning example that we've heard out there. It's outside of this the work share, but we've heard of some businesses that maybe they're larger, maybe they've been denied the 40,000, maybe that's not enough. They have no more access to credit or loans, to get the wage subsidy, they first have to make the payment of the wage. And so we've heard of one idea where maybe the employees are accessing the CERB, so using the CERB as sort of the source of cash, and then right before the online application is available, they do the retroactive hiring to pay those employees retroactive to March 15th. And in that case, the employees have to repay the CERB, and then they get paid their wage.
All right, and if folks have questions that we don't get to here or they think of after, if you just want to send a note to the chamber, we'll endeavor. We appreciate that KPMG's in business and does give out free advice all the time, but cognizant of what we're trying to do is provide general information to the business community. If you have a specific question, send it to us at the chamber and we'll follow up and do what we can to get the answer. So next question, choose, or it's the wage subsidy. Can you clarify earned versus paid payroll for the given periods?
Yeah, that was one thing I mentioned in the slides, was that that's a bit of a gray area. When I first read it, I thought it was when it was paid, but then I heard other discussions that were taking place maybe with the government that maybe it's on an earned basis, so you would prorate that wage over the relevant period. So still unknown.
Okay, and we'll seek some clarity on that. Excellent. And next question, are remuneration rules the same for the 10% versus the 75% subsidy?
Well, the type of the wages itself, what constitutes remuneration, but the criteria, there's no revenue decrease criteria. It's also not available to all employers. It's mostly geared at small businesses.
Can you confirm if a company meets the consolidated revenue drop test, the 75% subsidy can apply to both companies? This is for an NPO who owns a small business that's for profit. Interesting scenario.
Our understanding is if they have revenue, they can, once they show the revenue drop on a consolidated basis, then the affiliated entity, so as long as the NPO and the other business are affiliated, then each entity would qualify for the wage subsidy.
Okay, we're getting close to the conclusion here, but we have a couple that came in through the chat, and if you have another question, you can do it through the Q&A just as we wrap things up. I assume, one that came through the chat, I assume that the rules are the same for commission-based professionals who have assistants, and I'll jump to assumption this might be, as an example, someone that's a realtor, commission-based, but has assistants, and how are the rules applicable in that circumstances for the wage subsidy?
So I think, yeah, if the commission itself is a qualifying wage, but if it's, say, a realtor who is maybe self-employed and has reporting things on a sole proprietor basis, there's definitely, that's another gap that we're seeing, because they don't necessarily meet the $20,000 now, or they don't necessarily always show the revenue drop, and they're not always paying wages. Most of their wages are to themselves. I guess to the assistants, they could qualify, but I think maybe just some clarification in the actual question there.
Sure, and if we have time here in the next minute or so, if that person can do that. We'll just wrap things up, a couple more ones, and then we'll sign off. So to clarify, we as an employer pay, so this is a logistics question, Nicole, and you're probably close to this, and David as well, to most of us, except for when we get into applying for this. To clarify, we as the employer pay 100% of the wage and then are reimbursed. How is this the wage subsidy, from your expectations, going to be managed overall? Does when they actually have to pay out their employees, they pay it out and then they're reimbursed for that wage, and then they have to manage the money coming in from the government for the subsidy plus the money going out, to get a sense of, or is it the government's topping it up? Just the logistics, or could it vary?
With the 75% wage, it is a refund. So the companies are paying it now and they're getting a refund. The 10% is different, because the 10% was the initial one and it didn't really go away with the 75%. So it was it was really a reduction in what was paid to the government under the source deductions. And so there's definitely, that will be a logistical issue when you go and have to prepare the T4s, because what shows up as having been withheld on a T4 to an employee is not going to match what the CRA received. And at some point there will have to be some sort of mechanism that ties this to the 10% wage subsidy.
Excellent. So the final question we'll have, and this one is a general one, and maybe I'll yield to both this and then we'll wrap it up because this is an important one. In fact, Tourism Kelowna is hosting a roundtable discussion just on the hospitality and tourism sector, which obviously has been hit extremely hard. The question was, how will a wine tour business succeed through this current challenge? And it's a great question. So I'm not sure if you're hearing those general comments from your clients that are in crisis management because of the sector they're in, and any guidance that you could give them or at this particular stage.
Yeah, with respect to tourism business, it'll be interesting to see Tourism Kelowna's perspective on this, Dan. I think what we're finding with a lot of our clients, and some of our clients have been impacted more than others, is, and I guess there is a silver lining to this whole process, is that there are certain parts of their business they're looking and learning how to do differently. But businesses that rely on crowds and businesses rely on people and like traveling in a van and going from place to place are going to be impacted, and how you can manage your business around that, whether you do it in smaller groups or you find ways to do it while maintaining social distancing. We don't know how that is. We're finding with, even in our business, the accounting business has sort of moved to how we can do things more collaboratively using technology, how we can work from different locations. We always said that we were going to do that, and now that's been forced upon us. And we're finding that there's parts of that that's good, and parts of it that we're realizing will add a lot of value to our business. So I guess we don't really know, and I'd be curious specifically on tourism businesses like a wine tour business, Tourism Kelowna's perspective. But I think, or not to plug our firm or anything, but I know our senior partner, Elliot Longo, did a column in the Globe Mail today, and it's just an interesting read. And I think what we're finding is, as we go through this process, there's things we're going to learn that are going to make our businesses better, and business is going to change.
Excellent. So we've come to the end of the hour. We said we'd do this. We covered a lot of ground, a lot of detail. Nicole, thanks very much for your thorough presentation. Any final comments based on the experience of what you're hearing and the programs that you're seeing from your client?
I just feel like it's a very fast dynamic. Last week, work week, and the week before was a lot of phone calls and emails for those businesses that are in crisis and trying to get them up and running with their fund, like with the funding that was available last week, as soon as possible for them. So the key was that $40,000 loan, and the CERB was trying to make sure that those that qualified were accessing it.
And that's a great way to wrap this up. And we look forward to bringing back to get a sense when, are you hearing anything from your contacts in Ottawa, when we might get a federal budget?
You know what, I haven't heard anything, but I can't say that's been on the top of my list of things that I was watching out for.
So we'll, if not bringing you back for an analysis of the federal budget, we'll look forward down the road to bring you back, because as you say, this is pretty dynamic. Things are changing almost on a weekly basis. And in some ways, as we saw today, that is a positive thing with respect to the changing on the qualifications of the threshold for the loan program. And that's a pretty viable one that will at least move the needle. People can access it. 10% is, or 25%, right? Forgiveness on the 40,000?
Yeah. It's a 10,000 forgiveness, yeah.
Right, so I want to make sure I got that right. So that at least gives a little bit of time potentially for businesses to make some adjustments. So that might be something that they want to explore. I want to thank Nicole Watson, Senior Manager of Tax at KPMG, and former Chamber President and Office Partner, Managing Partner at KPMG in Kelowna, David Bond, for joining us. A reminder, next week we'll have His Worship, Mayor Colin Basran, on Wednesday. And then we're going to talk about this, working remotely. How do you connect with your employees, particularly in a time where previously this didn't occur? And we're going to work with Shawnee Love from Love HR next week. So we look forward to seeing you next week on the Business Smart. Thanks to David and Nicole and all of you for joining us on this Business Smarts webinar. Thanks and have a great day.
Thank you, Dan.
Thanks.